Welcome back, ladies and gentlemen, to the Stock Market Show. This is your host, Shades. The green line represents the price. The purple line is the 200 weighted moving average. You zoom out on the chart and you can see very clearly there's a pattern we can abuse in the bull run. This is a bull run, my friends. Welcome to the bull run of 2025. Unless something happens between this video being made and by the time you see it, we should see this rinse and repeat this pattern over and over again. So you zoom in on the chart. The price loves to come down to this purple line, right? You'll notice it comes down to the purple line and rallies, comes down to the purple line and rallies, comes down here again actually for a second opportunity and rallies, comes down again under the purple line and a huge rally. And guess what happened here? Came down close to the purple line and rallied again. So calls are your friend. If you guys know what calls are, leaps are your friend here on HIMS. Anytime it goes under that purple line, near it, at the purple line, whatever, whenever it comes down nice and cheap around that purple line, the play is to buy calls and buy them with plenty of time. Too many people, they want to go crazy and buy the cheapest calls ever and load up on them, but you never know if it's going to run away, if it's going to start running right away. Like sometimes it's not going to be right away. Sometimes you're going to have to sit there and wait. You're going to have to sit there and wait to see if it actually is going to make the big move back up. Because it's always done that. I just showed you the pattern. And I'm not using candlesticks right now. I know how to read candlesticks. I'm just not using candlesticks to show you that you don't even need to learn how to read candlesticks. You really don't. All you need to know is if price comes to that purple line, anywhere near it, load up on calls with time. I keep saying leaps because it's better to just buy as much time as possible to give you as much wiggle room as possible if in case it takes a while to get that move going. That's at least the thought process, right? That's what I'm thinking. You can also buy shares. Obviously, with shares, they can move 20% at a time. You saw that recently as of this video. But you stand to make way more with call options. But you really do have to have the balls. You have to believe that, yes, this is going to bounce off of that purple line like it always has. It's done so 1, 2, 3, 4. Damn, it's done it for the 5th time now. So we would expect at some point in the future it does it for a 6th time. You know, people always say, the dumb ones, the dumb money, they always say, oh, it's never going to come back down. It's never going to come back down. Never. Never going to come back down. It'll never, never, ever, ever come back down. And guess what? It always comes back down to this purple line. So that's the pattern. We're about abusing patterns. I think this one's very obvious. You don't even need to learn how to read candlesticks, and you can see here someone in my Discord bought HIMS calls, and yeah, look at that sweet 35% return. So damn, he bought 6 contracts. Sheesh. He bought 6 contracts. 12/19 expiration, so he bought like 6 months of time. So that's important. It's important to make sure you give it time more than anything, because sometimes it's not going to move right away. Sometimes you got to give it you got to give it the time, and the time is worth it because you stand to make quite a bit more compared to buying shares outright because of the power that comes with controlling 100 shares with one contract. Anyways, that's the pattern. Abuse it. That's it for the video. I'll see you in the next one.